Hello there. Welcome back to my channel. In this video, we want to look at module 3, whereby we are going to look at the wage control. We are going to start on our information that we have according to this video, which is on wage control. We have the explanation of exactly what transpires under wage control. We have a scenario whereby the management want to control the level of labor costs that they have in the business. For them to control those labor costs, they have to come up with strategies of planning and control that is going to make sure that the wage cost is what is expected. And remember, we have got a budgeted wage cost and we have got actual wage cost. So actual wage cost does not have to be above what has been budgeted for the wage cost. So whenever there is a variance, it indicates a mismanagement in terms of wages. There is a need for wage control so that we make sure that we don't have a scenario whereby we are going to have an adverse position at the end of the period in terms of the position of power, wage cost. According to the explanation that we are having here, it treats labor presents a particular to effectively control labor costs. Management needs accurate and timely information. For them to be able to counter the effective labor costs, they need to have accurate and timely information. So how can they obtain this accurate information? They can obtain the accurate information through through maintenance of staff records. They can also engage in time cards or clock cards. They can also have job cards and also payroll. The payroll also. So we have staff records, a time card or clock card. We also have a job card. Staff records. This is the department, and obviously they contain the employees or the workers information. This is going to enhance the calculation of wages so that there is accurate calculation of wages according to actual information that relate to each and every employee. So according to the information that we're given here in interviews and selects employees, this information helps them to compile the payroll. This calculating remuneration of workers. So remuneration, basically, we're talking about the wages and salaries that are going to be earned by the workers. The calculation is based on the information that relates to those workers. Remember, when a worker is hired, obviously they sign some contracts which also contains in terms of the actual wages that are going to be paid for each and every worker. Staff records have become the basis of calculating remuneration of workers. We have staff records. So clock cards basically they record the time when a worker arrives at the workplace and leaves at the workplace. So basically, we are saying the duration that the worker is at the workplace is indicated in a clock card, because every time the worker comes for work, the worker has to clock in, and when going out of the work, it clocks out. The time frame that has been spent by each and every worker is indicated in a clock card. So the first step towards labor control is to have accurate records of when workers clock in and clock out. In this essence, an electric time clock is installed near the entrance. Due to modern technology, there is what you call the electric time clock, which obviously every time the worker arrives, passes through the electric time clock and logs in, which is different from the manual logbook that was being used in earlier years. Basically, this is what we have in terms of a clock card or a time card. Then we also have a job card. A job card now becomes a part of the clock card. So job card, basically we are saying after the worker he has clocked in, uh, the job card now indicates what actually the worker was doing in the workplace, which jobs were being undertaken by the worker. A job card becomes specific in terms of the job processes that were undertaken by each and every worker. So we have got an explanation again that we have underneath, which reads, this is whereby costs are allocated to different jobs. The cost accountant needs to know the individual time each employee spent on individual jobs during a day. So we are saying when the worker is now in the workplace, the worker is clocked in, but when the worker was now working, which jobs were being worked by that worker is what is contained in a job card. We see that it contains the actual labor costs that relate to each and every job. So we are saying that the labor cost can therefore be applied to different jobs by means of a job card. So this is a control measure, as we see at the explanation of the job card, that it is an effective control measure, as it actually shows what each and every worker is actually doing in the workplace. So we go to the payroll also. The payroll now involves the recording of job specification, departments, and wage rate for each employee. So we have got the contents of the payroll, whereby we have got hours worked articulated, wages earned also. We also have deductions in terms of what is being deducted from each and every worker's wage or salary. And then the net salary or wage also is indicated on the payroll. Then we have a please note that we have there, which reads that the payroll is prepared from the clocker. So you would see that for the Human Resource Department to be able to calculate the actual wage which relates to each and every worker, they have to engage the clock card. The clock card shows which worker was coming to work on which days, so that it becomes a basis for calculating the actual wages that has to be paid. That is being showed in the payroll. So basically, this is what we have under the payroll. So moving on, you'd see that we also have what we call the production report. So a production report basically is a comparison between budgeted hours and actual hours. So basically, the essence behind the production report is to try to identify the variance in terms of what was the number of hours that was actually worked and the number of hours that were expected to be worked. Then we can see whether the business is operating at an adverse position, or is it showing a favorable position. So basically, if there is a need to correct in the case of adverse position, intervention measures can be put in place so that we correct that negative position. So explanation that we've had at the production report reads, it is based on measuring performance. It is very important to measure productivity regularly and to improve management with information, to compare actual information with the set standard. It should be compiled regularly to control labor costs and keep an eye on productivity. So basically, that's what we have in terms of the production report. So what contents do we have under the production report is what we have stated. The production report must show the following. It must show the total hours available, the hours actual worked, the output, calculated productivity. So basically, that is what is shown on the production report. Then we have got account entries that relate to labor. Remember, we are going to have indirect labor and direct labor. So what we have under the direct wages, what's the double entry that is involved, and then indirect wages, what's the double entry that is involved, is what we have under accounting entries. So, but we have to take note that non-manufacturing wages will not affect the production cost. So we are saying non-manufacturing wages, these are wages that relate to administration wages, sales and distribution wages. They are not part of the production cost. So those sales and distribution wages and administration wages are the non-manufacturing wages that we are referring to. So they are not going to be part of the production cost. So production costs in terms of labor cost, it relates to direct wages and indirect wages. So basically, this is the double entry that we have articulated here. So what we have under accounting entries is that direct labor costs can be directly allocated to the production account, while indirect labor must go through the overheads account. Very important for you to take note. The double entry for direct wages is that we debit the production control with the direct labor portion, and then we credit the labor control. Remember, initially, when this direct wages is paid and indirect wages is paid, they will be debited in the labor control. And then when we are now transferring them to their specific accounts, we are now transferring them from the labor control by crediting the labor control, and then now we debit the production control if it's direct wages. So if it's indirect wages, we are not going to debit the production control, but we debit the manufacturing overheads control. So that's the difference. But the account that's being credited, we can see that it's the same account, which is the interest. But what is actual control being debited? Overheads control being debited. So basically, this is the double entry that we have concerning the labor which relates to the production account, production and the manufacturing overheads control account. So basically, this is what we have. Thank you for listening, guys. Let's meet again in the next video. As for this video, I'm signing out.